Okay, now, firstly, sorry for the delay here. Okay, for setting up the recording software over here. All right. Now, I'd like to continue with the questions back, the one that I left off over here. All right. Now, tomorrow's class, I'll be covering a few things with you here. Today, I'll be looking at those questions. Tomorrow, I'd like to discuss a mock test with you, and I also like to look at the ISA with you here. There's one standard that I have not covered with you yet here. So, let us take a look at this. Where is it? The question and answer bank, which is over here. Hang on. Okay, so let's stop at question number this one here. So we can start today with Prescott Company on page number 76. So take a look at that. Okay, to revise with you, on the first day of the class, we have finished the ethics area and all the reporting area here. Ethics and reporting was finished on the first day, and then looking at audit risk and financial statement and business risk, we finished that on the second day, and today is supposed to be the third day, so I'm looking at the other areas here. Okay, so the first one will be Prescott Company question on page number 76. Let's take a look. Prescott Company, page number 76 here. Okay, right. Let's see. What do I have here? Question says, identify and explain the specific matters to be clarified in the terms of engagement. Terms of engagement. For this due diligence review of Robson Construction Company. Now, you see that it's actually 6 marks, right? 6 marks means you need to be writing 6 points here. Okay? Do you also realize that these are the favorite kind of questions for the examiner? I mean, the examiner always like to ask you matters to be clarified, just like this one over here. Okay? When you look at this kind of questions, the technique is you always need to be careful. Ask yourself, what are they asking? Matters to be clarified when carrying out the procedures, or matters to be clarified when before taking the client here. Okay? In this case, it's actually matters to be clarified before taking the client. So that means, okay, many things can come into play over here. If they say matters to be clarified when performing the procedures, I'll be looking at accounting standards mostly. I'll be looking at some accounting issues on the financial information. But in this case, they are asking for matters to be clarified in the terms of engagement. Okay? If I want to test you and I just want 1 point, what point could you give me? Just 1 point for this one here. Matters to be clarified. You can mention about the scope, alright, fine. Okay, so since you mentioned the scope, what about the scope that we have over here? The scope could be, you look at what are we supposed to review. Due diligence, alright, what am I supposed to do here? Because due diligence, there are actually many types of due diligence. It can be financial due diligence, which is the most common one. It can also be IT due diligence. It can be synergy. It can be many areas here. So I have to look at what kind of due diligence is it actually. Okay. Now, apart from scope, you can also talk about standard. What standard to follow over here. Alright. So if it's review, maybe I can follow ISRE, the International Standards of Review Engagement here. I have to look at the standard to be complied with. Alright. Now, many points, we'll discuss this later. This kind of question, if you get this kind of question, which is quite likely nowadays, it can be on anything. In the class, we say there is a chance that forensics auditing might be asked in the examinations. So perhaps you might get a question, what are the specific matters to be clarified in undertaking this forensics audit? Perhaps something like that, yeah. Then you start thinking, the engagement, the scope of it, and so on, yeah. Okay, help you later with this. Part B and Part C. Part B, state with reasons. They want the reasons, principal, additional information that should be made available for your review of Robson Construction Company. Okay, actually what is the question asking in simple English? Question is actually asking for the types of information that you will need over here. Alright? So, perhaps if you read through the case study, you will see that they are being sued by someone. I remember they were being sued by someone here. So, maybe you might want to get a legal confirmation. That could be one of the points over here. Okay? Again, I'll help you later. We look through the case study later and pick out the points. And then on part C, let's look at part C. State the specific inquiries you should make of Robson Construction Company's management relevant to its accounting for construction contracts. Okay? I think you gotta know a bit of IAS 11 on construction contracts to do this here. And be careful. State the specific inquiries. In simple English, the question is literally asking you, what should you ask? Okay? What type of question should you ask me here? So, state the specific inquiries, or what kind of question should you ask here? That's what the question is looking at. So maybe you can say, what depreciation method am I using? Okay? So all those will be relevant issues here. We have to look at it. Do we make full provision on loss-making contracts as required by the IAS, right? So, okay, you go ahead, you read the case study here, try to get some ideas from there. Okay. Okay? Alright? Now, let's take a look at it together. We'll see. Okay. My question is saying that Prescott Company, June 2006, your audit client, Prescott Company, is a national hotel group with substantial cash resources. Okay, substantial cash resource. Substantial cash resource means I can actually acquire another company easily. So it's good for me. That's why I'm quite interested in the word substantial cash resources. I have enough resources to acquire another company. Alright? Now, its accounting systems, its accounting functions are well managed, and group accounting policies are rigorously applied. Something interesting to me as well. I would like to look at the accounting policies. What kind of accounting policies are this here? Later. Okay. Now, company's financial year end 31st of December in P7, You always like to pay attention to the year end. Alright? So, I'll go on. Prescott has been seeking to acquire a construction company for some time in order to bring in-house the building and refurbishment of hotels and related leisure facilities. Okay, what's the reason for this acquisition? To bring in-house the building and refurbishment of hotels and related leisure facilities. That's the reason why they wanted to buy it over here. Okay, that means if the subsidiary, this potential subsidiary that I want to buy over here, if it is not a going concern, will you buy it or not? Let's say I'm doing financial due diligence and this subsidiary, potential subsidiary, sorry, is in bad shape here. Very poor liquidity, owe people a lot of money. Will you buy this subsidiary here? Will you? No, no. Will you? Bad. If it's bad, you should buy it. Why? Because I'm rich. I have a lot of cash resources. Go and negotiate with them for a very good deal here. Because if they are not doing well, they have no choice. They rather sell to you cheap than go bankrupt. You agree? So you will get a good deal on it here. You write that in your answer later. It shows good awareness, you see? Because going concern of the subsidiary, even though they are in bad shape, is not really an issue for me. I don't really care about that here. Okay? Now, I'd like to go on further. I only want the resources. That's the reason why I'm acquiring it here. This is a very nice question. You just pretend you are really doing due diligence on this thing here. Okay, so they have swimming pools, squash courts, restaurants, and Prescott's management has recently identified Robson Construction Company as a potential target and has urgently urged that you undertake a limited due diligence review. I think undertake a limited due diligence review. She's right earlier in mentioning scope, so this would be the scope. Okay, I think I want to check the scope later. Scope. What would you like to ask me to do? Alright. Lasting 2 days next week. 2 days. Okay. 2 days. I think I want to clarify that with the management as well. I only have 2 days. So in 2 days, what can I do? Do you agree 2 days is a very short period of time over here? How much can you possibly conduct in 2 days here? So scope, the time limit, all of which have to be agreed with the client here. Okay, no problem. Let's go on. Now, further to their preliminary talks with Robson's management, Prescott has provided you with the following brief on Robson Construction Company. I've talked to them. CEO, MD, FD, family members are all family members and major shareholders. I am very interested. Family members and major shareholders. Would you like to buy a family-owned company? Definitely not, right? You know why? Family-owned company, firstly, the company might be managed just like a family business. What am I saying? Of course, it's a family business. They manage it that way. Firstly, family-owned company, they might have different objectives over here. Okay? And also, family-owned company, you see they are so united over here. So if you take over the company, I think you need to replace the entire management team here. A lot of the staff will leave the company as well due to this kind of loyalty. Perhaps because it's a family-owned company, I might sign a contract with myself, a golden handshake kind of a thing here. So if you sack me from the company, so-called, you need to compensate me like 3 years of salary, some kind of golden handshake. Yeah, it's my company. I can sign some kind of contracts like that here. All right. Why am I telling you this? In part B, they asked me for the type of information that you need. So I think this is a type of information that you need here. I would like to have the service contracts of the directors, all of them. The director service contract, yeah. You agree? Okay. I got the first one. I'll go on. Okay. Next. The company name has an established reputation for quality constructions. Okay, it's good. I'm thinking of it. Established reputation for quality constructions. Perhaps some newspaper clippings and so on will be good here. I'm thinking if you say you have a good quality reputation, I'm sure some journalists would have written articles about you before here. Okay? Especially if you look through newspaper in the food industry, if you have got good reputation, you'll be published in the newspaper. At least once or twice, there'll be articles about you. I want that as information as well. Any newspaper clippings or reference in the media pertaining to the company. So, that's the second one. Right, let's go on. What else? Due to a recession in the building trade, company has been operating at its overdraft limit for the last 18 months and has been close to breaching debt covenants on several occasions. Close to breaching debt covenants on several occasions. Some candidates will see this point and they'll be thinking, oh, there is a risk that the subsidiary is not a going concern. Poor cash flow problem. And they might be telling, don't buy. Alright? But for you, I think you can get a good price on this thing here. I've got substantial cash resource. So if it's bad, all the better for me. This is like a good deal for me here. Alright? But one thing. Operating at its overdraft limit for the last 18 months. How would you like to check the overdraft? I think you want a copy of the overdraft contract here. In case I breach, what can they do to me? Can they just force me to pay back, or can they take over my assets, or can they take any other form of legal action here? Okay, so this is the third one. I'd like a copy of the overdraft contract. What else? Close to breaching debt covenants on several occasions. Okay, then next, apart from that, Robson's accounting policies are generally less prudent than those of Prescott. Assets are depreciated over longer estimated useful life. I think I want a copy of the accounting policies. Would you? Okay. So, the accounting policies. Then, I'll go on. Contract revenue. I'm thinking of IAS 11 now. Contract revenue is recognized on the percentage of completion method measured by reference to cost incurred to date. Okay, they use the cost. Provisions are made for loss-making contracts. Should I make provision for loss-making contracts? IAS says yes. Okay, IAS 11 and 37 says full provision must be made for loss-making contracts. IAS in fact use the word onerous contracts. Full provision must be made for onerous contracts. Yeah, but be careful. Provisions are made. Good or not good? Provisions are made. Is it good? Did they say full provision? No, they didn't. They say provisions are made, but that's not. I don't know whether it's full provision or not here. I think this is one of the inquiry that I'll ask the management. Are you making full provision on the loss-making contract? Yeah. Okay. That's one. Then let's go on further. The company's management team includes a qualified and experienced quantity surveyor. Would you like a copy of the quantity surveyor's qualification? Since he says he's qualified. And you know in construction company, this guy is like very powerful because he values this works in progress over here. So the stage of completion, he can influence the value here. Alright. His main responsibilities include supervising quarterly physical counts at major construction sites. That's the first. Comparing cost to date against quarterly rolling budgets. That's the second one. And determining profits and loss by contract at each financial year end. That's the third. Okay. I think the third point is especially interesting. They have budgets. Second point. Third point, determine profit and losses by contract. Although much of the labor is provided under subcontracts, all construction work is supervised by full-time managers. Okay, nothing interesting there. Then I go on. Okay. In August 2005, Robson received a claim that the site on which it built a housing development in 2002 was not properly drained and is now subsiding. Okay, some kind of problem here. Residents are demanding rectification and claiming damages. Would you like a copy of this claim? Okay, I think you want a lawyer's confirmation as well. Okay, then Robson has referred the matter to his lawyers and denied all liability, as the site preparation was subcontracted to Sarva Services Company. No provision has been made in respect of the claim, nor has any disclosure been made. This looks like a breach of IAS 37, not a contingent liability, not a provision. Okay, and audit report on Robson's financial statements for the year to 30th of June 2005. I like dates. 30th of June 2005. Was signed without modification in March 2006. Hang on, what's the date today? The date today, did they tell me? 31st of December is the year end. Okay, and financials, why is the year end so weird? On top they show company's financial year end is 31st of December. Oh, that's the group year end. Okay, and then this is the year end, signed without modification in March 2006. Okay, fine. Now, no issues over here, but I don't have the date right now here. Okay, so based on that, I think I know what to write for these points over here. So let's produce the answer and get the marks here. I'll just get some points for you. Let me get a piece of paper. Okay. Okay. This is this Sarva company question. Okay. I'll just write some short points for you. Robson Construction Company. What's the name of the question? Prescott Company. Okay. And this is part A. So, they say terms of the engagement, right? Specific matters to be clarified in terms of the engagement. Specific matters to be clarified in terms of the engagement. Okay, no problem. The first thing, I think you want to put in the scope, like we mentioned earlier. I'd like to put in the scope of the audit. I'll just write in short points over here. Scope. You explain a bit, like what does the engagement cover? For example, financial due diligence, okay, or maybe IT due diligence, or maybe HR due diligence. There can be many things here. So this is the first point. Okay. Apart from that, what else apart from the scope here? The standard. Okay. The standard to adhere to. Standard to adhere to, do I use ISRE 2004? You know what's ISRE 2004? Do I use ISRE 2004? ISRE 2004 is for a review of historical financial statements. Okay. In this case, I do not think it's appropriate for due diligence. Unless you are only doing financial due diligence, then it should be fine here. Okay. So you have to look at any relevant ISAs, any relevant ISAs. This is another point here. You should put a note saying that ISRE 2004 is unlikely to be exclusively suitable for use here. Okay, I'll just put it here. ISRE 2004 is unlikely to be the sole standard okay, in applicable here. Applicable. Yeah. Okay. Now, I got 2 points. I need 6. What else? I thought about the date also. I only have 2 days next week, right? So, you talk about the time frame. That should be in the audit as well. Very likely, I'll be charging you based on the 2 days work. Anything extra that I cannot finish, I'm not doing it already. Since we only charge for 2 days work here. It's based on the time. Unless you can put in the objective here. So the time frame, 2 days next week. Okay. How many points do I have now? I have 3. I need a 4th one. Would you put in the objective as well? Why are you acquiring the company? What do you want me to specially look out for over here? So I put in the objective as well. Okay. The objective. Perhaps the objective, you can look at stuff like the purpose of the DD, due diligence. In this case, I am mainly looking at what did the question ask for? The question mentioned to bring in-house building and refurbishment of hotels and related leisure facilities. Okay. The client wishes to bring in-house the refurbishment of hotels and related leisure facilities. Okay, so what do you want me to look for? Usually when you want to buy a company, what is it for? In this case, I don't think it's for the management. When you buy, they will leave the company already. Because the management are all family members here. What do you think you are buying the company for? I suppose the resources of the company. Alright, assets, perhaps assets. But it looks like quite a small company to me. Perhaps other resources like the manpower. Resources such as manpower. Okay, that can be another. Okay. Then what else? How many points do I have now? 1, 2, 3, 4. Okay, 2 more points. What other points can you think of? Yeah. If you cannot think of answer, think of what are the items in ISA 210. 210 are the items in an engagement letter here, which is actually for an audit. I think you can copy some points from there and adjust it to become due diligence items over here. Does anyone know what are the items from ISA 210? Responsibility. Okay. Let's see, can we put in responsibility in this case over here? So, responsibility of auditors and responsibilities of management, right? Usually that's it. But responsibility, our responsibility, I think we can mention the type of work that we will perform, mainly AP and inquiries. Now, that's a good point, you see. We use that as a framework to think of ideas. Because actually, due diligence, there's no standard one. So we have to think of that to produce ideas here. Yep, we got 1 point already. And he mentioned the type of work, like type of work that will be performed. Like purely, most of my procedures will be limited to AP, analytical procedure, and inquiries. Okay, that's one. Now, what else? Think of ISA again. Terms of the engagement. I think the ISA, they told me I need to have unrestricted access, right, to the accounting records whatsoever. So can I put that in as well? You want me to do due diligence for you? Fine. But I need unrestricted access to the records over here. So that should be in as well. Agreement. Okay. Unrestricted access to whatsoever form of records required. Okay. And then what else apart from that? 1, 2, 3, 4, 5, 6. Oh, finish. Okay, just nice here. I'm just afraid of one thing. I noticed that this point on scope and this point on type of work might sound almost the same over here. Alright, perhaps you might like to combine both points together. But if you put that in, assuming it's just 5 points, right? I need one extra point. What else could I write here? Liability, perhaps disclaimer. What is the type of liability that I'll be liable for here? Can you sue me if I make a mistake here? Any clarification about liability and so on? Okay, clarification regarding the reviewer's liability. I think it should be smart of you if you put in I am not detecting fraud because I'm not auditing and I am just reviewing here, so fraud cannot be detected. And errors, I don't think I can detect errors also. This is not an audit. Okay, not enough. Okay, right. I am finished with part 8. Would you like to ask any questions? Add on anything? Fine. Yes. Sorry. Fee. Yes. Fee should be possible as well. If the time is in, the fee should be in as well. Maybe a better way of writing that could be the basis of charging. All right. What basis would you like to charge them? Based on hours worked, based on number of days, based on type of work performed, so the fee should be done as well. Yeah. And you gave me another idea. Perhaps you could also mention the type of report that I'll be providing to you here. Okay. So that's another thing here. See, so many things that you can write on this here. The technique is think of the ISA related ones like ISA 210, and you know that there are 6 items in an engagement letter here. So you think of that and think of how to change it to due diligence here. You have the objective, responsibility, just change it around this way here. Okay, we look at part B. Okay, right. Part B is actually on principal additional information. They want the reason, be careful. So they want this principal additional information. What would you like to request from the client? 8. I think I need 8 items. So I label it on top. I have these family members. So I want the director service contracts. The first item, I like the director's service contracts. Why? Because the directors are family members. The directors are family members, so there is a risk that there may be exit clause. All right. There may be hefty payments. In B1, you call that golden handshakes. Golden handshakes. Payable to the directors upon termination of the contract. Upon termination of the contract. Okay. Right. I got the first point. Then you think of it and see. Apart from that, come back to the question again. I labeled it reputation for quality constructions. So I want some perhaps newspaper clippings or media reports. Okay. Media reports. Perhaps newspaper clippings or trade magazine articles. And why do I want this? Related to the company. Why should I have this? Because to sustain the reputation of the company. Okay. That's one. Alright. Now, What else would I have apart from that? Let's come back here. The third one. They have breached their overdraft limit for the last 18 months. I'd like a copy of that. Okay. I want the overdraft. Why would you want that? Overdraft contract to determine the what's the word for that? Repercussions of breaching the covenant. Okay, because maybe you can get extra liability. They can sue you. They might be able to take away certain assets. So extra liability may be incurred. Okay. Now, what else? Another thing. Come back to the question again. Another point relating to this thing here. I'm thinking, do you know how to audit PFI? Yes, prospective financial information. When I check going concern, I'll have to look at budgets, forecast, discussion, and management. Yeah, I think I'd like to get a copy of the forecast and budget to find out do they have any potential going concern problems here. The reason why I want that is because I'm trying to find the position of the company so I know where I stand. What price can I offer to them over here? Okay, but I say I don't mind if the company is almost going bankrupt. Even better for me. Okay, so when you write the reason later, don't say that it's because I want to buy a financially strong company. It's just because I want to ascertain the financial position here. So perhaps like the forecast or budgets. Example, cash forecast. Cash flow forecast. Now, why? To ascertain the financial position of the company to determine a fair price to offer. Okay, and you should make a note here. You should make a note here that says that if what's the name of the company? Robson, is it? Yes. If Robson is in poor financial health, okay, a better deal may be negotiated. A better deal may be negotiated. Okay. The parent company is cash rich. Company is cash rich. So you can like inject money into this company and solve the problem here. Okay. Right. What else do I have apart from that? Forecast budget done already. How many points is the question? 8. Provisions. Let me see. I have 1, 2, 3, 4. Only 4. I need a lot more. Okay. Next. Can you tell me how to check accounting policy? How do I check accounting policy? So simple. Maybe it's too simple, you don't know the answer. You look at financial statements, all right? Prior period financial statements to look at the accounting policy disclosed. Why do I need that? Because their accounting policies and mine are different. Theirs are less prudent. So I have to see if I adjust their policy to mine here, what is the overall effect on the financial statements here? Okay, so I'd like to get a copy of the prior period financial statements. Especially, I like to look at the accounting policy note. Accounting policy note. Okay. Now, because I want to see the overall impact, the overall impact of reconciling the differences between London and Prescott's accounting policy. Okay, right. And then what else? Apart from that, I think 1 point, 2, 3, 4, 5, 5 points. 3 more to go. Come back to the question. Let's see. Okay. They say provisions are made for loss-making contracts, not interested. The quantity surveyor, I'm interested. What do you want to look at for the quantity surveyor? Perhaps a copy of the qualifications, but perhaps something even better could be quantity surveyor's working papers. That could be even better here. To ascertain the quality of the quantity surveyor's work here, look at his working papers. Do you think the assumptions used are reasonable or not over here? Alright? So, great. We would be looking at the assumptions used. Is it logical or not over here? You have a duty, but if you are performing due diligence, you have to take a look at it. Even though you don't understand, you have to look at it and review it over here. Okay? So, that's one thing. You see, auditors are made to audit a lot of companies, and a lot of things auditors don't understand here, but we are expected to track it. So always, right, the rule of thumb is you compare with general knowledge here. So whatever you see in the company, you try to compare with general knowledge, should be fine. Okay? So, you made me forget the point. What did I say just now? Working papers. Working papers, yes. Okay. So, like the quantity surveyors working papers. And why do I want to know that? To assess the quality of the quantity surveyor's work. This one definitely I know how to check it. Quality. Do they prepare it nicely? Proper formatting? All these can show a bit of the quality here. Apart from that, okay, I can also look at the assumptions used. Reasonable of the assumptions used. Okay. Right. I need 2 more points. Actually, right, this question is easy. You can write anything and get the marks here. What else do you want? Contracts. Okay. Yep. What kind of contracts? Contracts for the contracts. What do you mean by that? Yes. Or you want the construction contracts? Okay. Okay. All right. Want a copy of that here to determine if there are any onerous contracts or not. Yeah. Yep. All right. So maybe the significant contracts will do since we only have 2 days. So we have significant. Sorry. Okay. Significant construction contracts. Why do I need that here? To ascertain the qual the possibility of Robson entering into onerous contracts. Okay. I'll help you with 1 more point. Actually, you can write 2 more, but just to help you with 1 more. What else can you do to check quality? I think it's very important when you take over a company. You like to look at, okay, you say it's physical inspection. I think that one I really don't know how, because it's like specialized knowledge here. I can't go and check the building and all this here. As an auditor, I wouldn't know how to check it here. But really, in real life, you might just go and look at it here. This is like not really under the scope of due diligence really. I suppose my client is an expert in this industry. That's why they want to buy this company here. They should be able to send someone to look at it, the workmanship, the quality, is it good or not good. As an auditor, I like records. What kind of records can I have to look at quality? Correspondence with customers. Customers will complain. If you have bad quality, the customers will complain. So perhaps I'd like a copy of customer correspondence to ascertain the quality of the work. If there's a lot of complaints, that means there might be quality problem. This is the first thing. Maybe correspondence with the legal authorities as well. I suppose even in Malaysia, all the buildings need to be inspected before hand over to the other party over here. They call it this certificate of fitness, all right, CF here. So I have to look at the correspondence. If they send me the letter saying that I have bad quality, so I cannot grant you the CF, then you see that's one of the problem over here. So I mentioned that I think it's good if you have some practical experience in the construction industry over here. General terms to use. Another thing, maybe even I can look at, in construction industry, when you build a particular building, there will be something called retention payment, right? You don't pay off everything, right? So somewhere around 5% will be a retention payment. Yeah. You finish building the building after like 6 months, 1 year, okay, confirm the building, no leaks, whatever, then only I pay you the amount over here. So I would like to look at the percentage of retention payment collected. If you collect 100% good, that means you have got good quality. If you collect less than 100%, that means people have made a lot of claims against you. And I think the only reason for that happening could be you have got bad quality. That's why they keep claiming here leaking, there leaking, then they start deducting against the retention payment over here. Okay, I mentioned that also. What else can I say? I think the lawyer contract. There is something with the lawyer in there as well. So I like correspondence with the lawyers to determine the likely outcome of this SAWA contract, the sinking building or something. There was a sinking building over there. Okay, subsiding. Okay, right. Okay, firstly, now mention correspondence with customers, like to determine the quality. Sorry. Principal additional information. I think it's principal additional information. Okay. Now, correspondence with customers to determine the quality of this. What is not principal information? I tell you. Okay. If you want to get the AA and MA of the company, that is not principal because there's not really a reason for that. Yeah. Or maybe you want to look at things like the director's birth certificate perhaps. That's like not principal information already. They just don't want you to go like something ridiculous, totally out of scope. This is okay. Correspondence with customer to determine the quality of Robson's work. Okay. Now, then I also mentioned the correspondence with the lawyer. Okay. Correspondence with lawyers because you'd like to ascertain the likely outcome of the SARWA dispute. SARWA dispute. Okay. All right. And then what else? I think enough already. Okay. Right. The last one. Inquiries. In class I always tell you don't answer a question with a question. So try to make it in a statement form instead of in a question form here. In this case, I'll make an exception. The examiner wants you to answer in a question form. This is one of the rare questions where they ask you what are the inquiries you should make. So think of what, when, why, how, who, perhaps, all kinds of questions here. This is the only time that you can answer a question with a question. Alright? So, specific inquiries you should make. They say it's relevant to construction contracts here. So, the specific inquiries. Okay. Now, what do I have here? The first one, I remember the full provision thing. Yes. Full provision made on loss making contract. What else do you want to ask them? Ask away. Perhaps you might want to ask them. Let's look at the case study. Quantity survey, yeah. I'm looking at this point here. Profit and losses. Suddenly this caught my eye on losses here. I would like to ask them what are the costs of losses on construction contract here. Usually construction contract you will make money. The profit margin is quite high over here. The thing that I'm worried of is going concern problem. In terms of profitability, it's very likely to be profitable here. But if you make a loss, what are the likely problems? Poor costing, okay? It could be due to poor costing. It could be due to materials being stolen. So if people start stealing your materials, then your cost will go up very high over here. So that will affect profitability, especially if you lowball on the contract. So it's very close to cost here. People start stealing material or there are some defects, it could cause loss-making contracts already. So I'd like to look at that. What are the causes of loss-making contracts? Okay, like for example, theft of material, poor costing, theft of materials, and so on. Okay. And apart from that, you could also look at let's see, how many months? 6, 4 more to go. There is this claim as well. This Sarva Services Company thing over here. I want to ask for management's opinion on the claim here. What is management's assessment based on the claim experience here? Okay, that will be one point. One. What is the management assessment of the likely outcome of the Sarva dispute? Okay. Yep, I'd like to ask this. And also, apart from that, what else would you like to ask? Management's assessment of the likely outcome of the Sarva dispute. Then we can look at questions to ask. 1, 2, 3. 6 questions. Yeah, 6 questions. 6 marks. Just think of 6 things to ask here relating to the construction contract. Must be something that's specific here. Okay. Change in revenue recognition. What makes you ask that question? Okay. So if there's change in revenue recognition, there's a wrong estimation of the percentage of completion, is it? Okay. Yep. Fine. The had there been has there been any changes in revenue recognition? Okay. Then let's explain the reason. Why are you asking that here? So you say change in the revenue recognition may indicate poor costing. Okay. You gave me another idea. I thought about the claims. How many percent of the retention payment has been fully collected? Yeah. Okay. What is the percentage of retention payment that has been recovered? Okay. What is the percentage? Now say full recovery means there are no issues regarding quality. Okay. Now, how many points already? Fine. Last one. Okay, think of this. You guys know how to prepare a construction account, right? The account you open up, construction contract here, there's a debit, there's a credit sign. What are the items in the accounts? I'm sure we can think of some points based on that. I can think of depreciation. We have to charge depreciation to that particular contract itself here. Okay, so perhaps we can say something about the depreciation as well here. Perhaps you can mention about the useful life of the assets here. Okay, so I'd like to look at the useful life of the assets here. That can help me in the costing. All right, but what kind of question can I ask? Perhaps, what are the actual useful life of the assets used in construction? Okay, I'll mention profit or loss may indicate incorrect estimate. Okay, now that's it lah. Just to look at due diligence review. That's a question. I'm done. Basis of which they chose the subcontractors. Yes. Okay. Now, but let me look at that first. I think the question says accounting for construction contracts here. So it must be related to accounting issues. Okay. So, right. Let's come back over here. Now, this is a question on due diligence. I did this question in last sitting revision class as well, and I think it paid off because in the exam, you remember the question that we did in the class? Last sitting's question, there was the due diligence question. It sounded almost like this one here. I think this is harder. That one was easier, last sitting's question here. Because last sitting's question, the answer was in the case study already. At least this one, you need to think of the points over here. Alright? And this is a good question to try Due diligence is always an important area in the exam. Personally, if you ask me, I don't think you will get one full question on that this round here since it has been asked last today. However, I think it's always possible if you get a part question somewhere here, maybe embedded as part of question 2, for example, you might get something like that. So that's why we shall not skip this. Okay, let's go on. Now, if you're okay, next I'd like to look at matters and evidence, I believe. Where is it? Yes, matters and evidence. Now, I think if I look at the mock test, which I've marked already, I noticed that a lot of candidates pass the mock test because of this question. Apparently, some students are very good in accounting standards here, so you discuss a lot of these issues and you get it here. Alright? I only have one comment to make about the matters and evidence question. You must make sure your presentation is appropriate. Like, I noticed one candidate that passed the exam wrote the thing in like paragraph form over here. The thing was like full paragraph form. It was very difficult to pick out the points from this answer here. So a lot of points might be left. I was reading it quite carefully, but in the exams, if they like mark it fast, they might miss points here. So don't be too obsessed with writing in paragraph form here. Alright? If they don't provide you with professional marks, really there's no reason to write in paragraph form here. So you look at the kind of answer. I think short sentences would do to pick out the points here. So you take a look. These kind of questions are called matters and evidence questions, and they are relatively popular in the exams. You see the article written, it's usually at the review stage of the audit. It's part of quality control here. Now the question says, required for each of the above issues, comment on matters you should consider. Number 1, and then evidence that you should expect to find. Number 2. Okay, be careful. Sometimes the question says matters that you should consider and procedures that you should perform. I believe on the first day, I've told you there's a difference between audit procedures and audit evidence here. So make sure you know the difference between the two. In this case, they are asking for evidence. Now, there's also a particular technique to answering this kind of question here. The first step, you should always calculate materiality. Okay? When you look through this thing, for those of you that don't know, listen here, you should always start with calculation of materiality. Calculation of materiality based on percentage, and then you must say material or not material. You get 1 mark for that over here. Okay? When calculating materiality, there are a few things that you should not do. Number 1, examiner says don't use a scattergun approach, which means you calculate against everything. Calculate against PA, calculate against revenue, calculate against PBT, and then you don't know which is relevant here. I always tell the students, calculate against relevant figure. If this thing affects revenue, calculate against revenue. If this thing, maybe it is a under provision of something, I did not provide for a legal claim here, then you should only calculate against TA, total assets, because the provision is a liability, and you calculate against PBT, because expense will be affected already. Don't calculate against revenue if I am receiving a claim from someone here. Now, the other thing is you should always state whether it's material or not material here. Okay? Now, let's see. For this one here, matters to consider audit evidence you'd expect to find here. So, you can read the case study. Go ahead, read the case study here. We'll look at it together. Okay, would you like to look at it together? I picked this question because this question they use more general accounting standards over here, and also that part B is quite unique. Part B they ask something quite general here, so it's quite hard to pick up this question. Looks easy, but actually not very easy here. So we look at it together. This kind of questions are matters to consider. In this kind of questions, be careful. Do not answer a question with a question. So do not say, for example, is this deductible? You have to decide. As a candidate, you have to write, this is deductible. All right, or whatever. Don't answer a question with a question. These are the parts here. Okay, now look at it first. You are the manager responsible for the audit of Kevlar Company, private limited company engaged in the manufacture of plastic products. Draft financial statements for the year ended 31st of March show revenue 47.4 million. Revenue, PBT 2 million, and TA 33.8 million. 47.4 million, 2 million, and 33.8 million. Okay. The following issues arising during the final audit have been noted on the schedule of points for your attention. Okay, so the three figures I've highlighted are for materiality calculation. Okay, now look at part A. In April 2005, always pay attention to the date. Maybe there's a bit of IAS 10 sometimes. So April 2005, what's the year end? March 2006. So just 1 year ago. Yes, exactly 1 year ago. No time apportionment problem here. Kevlar bought the right to use a landfill site for a period of 15 years. I think 15 years should be the UEL, useful economic life. For 1.1 million, that should be the cost of this particular license here. Okay. Right to use. That sounds like an intangible asset here. Maybe IAS 38 should come in. Since it's quite material, 1.1 million, yeah. So I'm thinking of IAS 38. It's a right. Okay. Kevlar expects that the amount of waste that it will need to dump will increase annually, and the site will be completely filled just after 10 years. Be careful. The right is actually for 1.15 years. Okay, but it will be completely filled after 10 years. So, firstly, to ask you, will you treat this as definite or indefinite useful life asset? Do a countering statement. Amortize or test for impairment annually. Only one correct answer. Amortize or test for impairment annually. Have to amortize. Okay. So you have to amortize for this one here. The question is amortize over how many years? 15 or 10? 15 years duration of the license. 10 years, then it's the useful life over here. Do you amortize over 15 or 10 years here? Don't tell me 15 and don't tell me 10 either. Both can be correct here. Seriously, both can be correct. You have to find out one thing. Maximum 15 years. If you amortize over 16 years, sure gone already. Because the thing, maximum 15 years here. My point is, sometimes after I finish using the site, can I just keep it there? And because the license is for so long, I can choose not to clean up the site over here. So there are a lot of implications here. Should I put in 10 or 15 years here? Okay. Now, but then please don't write exactly like what I'm saying right now. If you write, should be amortized over 15 or 10 years, gone. You have to decide. Don't ask the examiner such questions here. Alright? Then, Kefler has charged the following amounts to the income statement for the year to 31st of March 2006. Charge the following amounts. That means the expense of to profit and loss for the year here. Number 1, 20,000 license amortization calculated on a sum of digits basis. Sum of digits basis to increase the charge over the useful life of the site here. Okay. Now, what did IAS 38 say? I think there is a very small part of IAS 38. What depreciation method do they prefer? I think they like straight line basis. Alright. IAS 38 says in the absence of evidence, you have to use straight line basis. Yeah. Can I use sum of digits method? Actually, IAS 38 says if you can prove that you will be using more, then you can use it over here. If you can prove it, no problem. If you cannot prove it, then you have to be using straight line method. So I'll be looking at how much amount is down here. Okay, which will be quite challenging to test. How to test how much rubbish will you throw away in the next 15 years here? Got method. Later I'll tell you. Okay. Then next, 100,000 annual provision for restoring the land in 15 years time. 100,000 annual provision. Okay, for restoring the land in 15 years time. Firstly, do you know what's the meaning of annual provision? Annual provision means this year they provide a bit, next year provide a bit more, third year they provide a bit more. But so bit by bit they start providing a bit over the 15 years over here. Okay, can or cannot? Or should I provide in full? Two choices: annual provision or provide in full. Full. Alright, what standard did say provide in full? IAS 6, 16 and 37. Okay, 16 and 37. IAS 16 says you have to provide for the amount and then you capitalize this cost into the part of cost of the asset here. Okay, this should be called clean up cost. You need to clean up the land here. Make sure the whole amount is recorded in present value here. Have to be discounted to present value. Then you get 1 point for mentioning that here. And also, IAS 37, the provision must be made. I think this is probable. There should be a legal obligation and the amount can be estimated reliably. So, IAS 16 and 37. IAS 16 and 37. Okay. Now, I'll not provide the full answer for you on an answer plan, but a partial answer on the structure, on how you would draft your answer. You could go this way. Okay. Now, for this part, you could go this way here. You always start by materiality calculation. Okay. So, let's see if you know how to calculate the materiality. Which figure do you use? There are so many figures. I think there's a few things to calculate. Number one is a 1.1 million in total here. The 1.1 million, you should calculate against PA, since it's an asset here. Okay, this 1.1 million, which is the cost. You have to calculate against PA. Okay. Do you calculate against revenue? Definitely not. Do you calculate against PBT? Profit before tax? I don't think so. Okay. So, but if you calculate against PBT, it's not really that wrong also because it affects amortization. The cost affects amortization here. Okay. Now, then, what else? I'll be mentioning about the right. This is actually an intangible asset. Okay. Should account for as per IAS 38. Okay. Then what else? I'll come back here. I'll pick out the points for you. There's another method to consider. The useful economic life. 10 or 15 years. Very likely, if it's you, right, will you use 10 or 15 years? Because we need an answer. I'll use 15 years. Okay. But the provision, 10 or 15 years. That one I don't know. When do you want to clean up? Clean up after it's full or clean up after the license expire over here. Okay. Amortization again, I'll amortize over 15 years because the right is for 15 years. But the provision, when you want to calculate present value, do you calculate over 15 years or 10 years? That one I have to ask you. When do you intend to clean up the site here? 10 years clean up or 15 years? They didn't say 10 years. They did say it's cheaper. Maybe in 15 years time there's a special technology to clean up that can be cheaper. We wouldn't know over here. So we don't know. Is it 10 years or 15 years here? Okay, right. Now, likely should be 15 years, reflecting the UEL of the license. Okay, then what else? I say, talk about the sum of digits method. Sum of digits. Okay, in IAS 38, by default, what? By default, straight line method. Straight line method should be used. Okay, by default, the straight line method should be used. Unless another method presents a truer, is there such a word? Truer and fairer wave. Okay, now, then next, I thought about the Annual provision. Annual provision. This is actually contrary to IAS 16 and 37. Contrary to IAS 16 and 37. Okay. The amount should be provided for in full at the start of the asset. At the inception. Inception is for lease. At the beginning of the asset. At the starting point of the asset, whatever you use. The start of the asset. Or date of recognition of the asset sounds better. Alright? Now, then I say the provision should be at present value. Provision should be at present value. The question here is, should they be using 10 years or 15 years? Okay. Should be 10 years. Should be 10 years if the provision, if the cleanup is performed upon the landfill reaching its capacity. Reaching its capacity. Okay, right. Enough. Then I look at the evidence. What kind of evidence will you provide? Just a few points will do here. Would you like to get a copy of this right? Alright, you purchase the right? So copy of the purchase contract. So when you write that time, you should put this. A copy of the purchase contract to determine if a copy of the purchase contract to determine if what's the name of this company? Kevlar owns. Kevlar indeed owns the right. Okay. Now another thing. Always, if you can't think of points, bank statement usually helps here. If you have purchased, you need bank statement. So you can put in the bank statement here. Okay. Bank statement showing that the amount has been paid to acquire the right. What other points are there? Or the evidence, very simple. Okay, let's do something interesting. They want to check whether should I use straight line method or should I use sum of digits method. And the only way to find out which method is better, you have to look at the usage pattern of that here. Okay? How do I check the usage pattern? How do I know how much rubbish I'll throw? Sorry?
Amount of contracts.
Amount of contracts. What contracts?
More rubbish.
What am I selling? Manufacture of plastic products here. Okay, so I'm engaged in the manufacture of plastic products here. Now, I will have to look at PFI already. Just review the dump budgets of the company. Seriously, what other words can you call it here? Just call it a dumping budget or dump budgets to look at how much rubbish you throw in the year here. So dump budgets can show me roughly how much rubbish will I throw away here. Alright, so I'll put that in. Okay, I say the dumping budgets. Sounds weird. Never mind. Dumping budgets to ascertain that usage will indeed be gradually increasing. I think I've told you one thing before here. When you write audit evidence, always tell me what's the reason that you want this thing over here. Otherwise, it's not so appropriate already. When you want something, tell me why do you want it here. Okay, I think that should be enough for part A. Yep, should be enough here. Okay, now, we can go for a break now. Later, we'll continue with the other parts here. Okay, can we continue? Let's see. Now, I'd like to look at the part B now. I've done part A already, right? So let's look at part B. What do we have in part B? That looks like a party going on. Now, what do I have here? Part B. A sale of industrial equipment to Daking Company in May 2005 resulted in a loss on disposal of 0.3 million. Loss on disposal 0.3 million that has been separately disclosed on the face of the income statement. I like this question, I tell you. They can really think of a lot of points on this one here. I'll help you. The equipment cost 1.2 million when it was purchased in April 1996, being depreciated on a straight line basis over 20 years. Okay, do you agree with me that this question looked too innocent and too straightforward that, it's quite hard to pick any accounting issues out of this thing over here? What can you mention matters to consider? I'll turn on your professional skepticism button. So think of something that could go wrong with the company. What can you think? Can I give you the points? Give up? Okay, now, it's a 6-mark question. And firstly, looking at that 6-mark here, loss of disposal of 0.3 million, they actually kept focusing on the 0.3 million loss here. Firstly, they started asking, 0.3 million is about 300,000 over here. So it's quite material. Why do we make a loss? What are the reasons of making a loss? When you make a loss, either you sell too cheap here. That's why you make a loss here. Why would you sell it at a lower price than the market value? Maybe it's because it's a related party. Then they start writing about IAS 24 over here. There is a risk that because this is a related party, disclosures are not made. Sale of property to a related party is something of a related party transaction here, and it needs to be disclosed. So that was one thing. I know I didn't think of that as well. You don't need to have that look at your face over here. That was difficult. I told you this one. They thought of one point and they started explaining on it. Yeah. And you like the next one. You know what did they say? Apart from that related party thing, you should also consider why would I make a loss on disposal? Maybe the asset was in value and I didn't find out. That's why I made a loss on disposal. But it didn't stop here. If there is a impairment that has been undiscovered, I need to make prior period adjustment. Then they bring in IAS. Okay? I might need to make prior period adjustment here. This is really super speculative, I tell you. They put in a lot of all these possibilities here. So IAS 8 came in again, maybe I'll need to make prior period adjustment because there might be impairment occurring in the prior period that has not been discovered here. So that was another point. And I suppose another 1 mark for materiality calculation, you'll get all 3 marks here. If you want to complain that this question is not fair, first let me tell you that it's a past year question. Okay. Now, and don't be afraid, you're not alone. I think it's difficult too. Alright. Sometimes I'm still amazed by this question despite having tried it for so many times here. Very creative examiner, the way that they embed the point inside that question. Yep. But let's talk about audit evidence here. What kind of audit evidence will I require? Like a management representation letter. You know why? Related party you cannot audit on. You have to rely on management representation. You have to rely on inquiries here. So I'd like to have a management representation letter to confirm that this party is or is not a related party here. I have a management representation letter for that. And then, apart from that, what else do I need? Perhaps I also need a management representation letter. Mention about the cost, the disposal, purchase. I'll probably have to test the asset for impairment here. Think of some ideas. How do I test the asset for impairment here? And this is a prior period testing here. Never mind. Let us just produce the answer and think of the points as we go here. Okay. So this is part B. B. The disposal of asset. Okay. Disposal of asset. And then if you mention disposal of asset first thing, the method to consider, the loss on disposal, how many million? 0.3 million. Loss on disposal, 0.3 million. Okay. Is this disposed at below market value to a related party? Okay. Now, if yes, right, then IAS 24 requires specific disclosures. So you mentioned this as the first point here. The second point, what is the reason for loss? Maybe it's due to under depreciation, under depreciation. Okay, if it's under depreciated, I'll be asking the question, are there any other similar assets that had also been under depreciated? Okay. Are there any similar assets that have been under depreciated? That's the second one. Okay. Apart from that, what else? I mentioned about the correction of error here, right? Now, if the asset might be impaired in previous year, the asset may be impaired in the previous year. So, therefore, prior period correction of error may need to be produced, may need to be recorded in accordance with IAS 8. Okay, now find that's the next thing, then evidence enough. 1, 2, 3. I haven't even calculated the materiality. Materiality will give you another 1 mark here. In this case, you'll calculate against PBT for the profit or loss on disposal. Alright. So, another issue to consider. Where should you present profit or loss on disposal? On the financial statements. This is something so basic that a lot of people don't know. Because maybe they don't study that under P2. Is it in P2 syllabus? Profit or loss on disposal, where to disclose this thing over here. It doesn't go under operating income, right? Alright. This thing can go under OCI over here, other comprehensive income. Then you can put in this disposal profit here. Okay. There is a risk that they group it under operating income, perhaps as one of the items. That's a matter to consider. Okay. The matter to consider will be classification of profit on disposal should be under OCI. Should be in OCI. Okay. Right. Yes. Actually, not really reverse the impairment here. If last year it was already impaired, right, then they will need to perform a prior period adjustment. Okay, because that means last year's financial statements is misstated already. Because the impairment exists at that date, but I didn't discover. That means last year's financial statements had been impaired. Last year's asset has already been impaired, not discovered, so assets will be misstated last year. So I will need to perform a correction of error. That's what I'm trying to figure out right now, but that's the correct issue to consider here. Impairment of the asset. I suppose you look at the value right now here. How much have I sold it for? So I'll ascertain the fair value at this particular date today, and I'll find out when did the impairment actually occur. If it's actually occurred last year, then I'll just assume that last year this should be the carrying value as well. Okay, so I'll work from now and roll backwards to last year's date over here. Okay, now because this is a machinery, I'll look at the maintenance logs, for example. In real life, I'll tell you how to audit. In the exam, it's quite difficult because there's too many things to write already. I'll have to look at the maintenance log. For example, if you tell me machine is impaired, I'll look at the maintenance record here. Are there any issues with the machine or not? If the issue started long ago, that means it has been impaired from long ago here. I'll look at all those indicators. Okay, but you can't write all this in the exams because it's like it can be one whole question by itself. So just go simple on that. Yeah. Okay. Right. Right. Evidence. Okay. Now, What's the evidence? Firstly, you look at the management representation. Okay, I'll need to have management representation. To confirm that the sale is made or not made to a related party. You see, I keep putting down the reason. Related party. Okay. Now, what else? Whenever you don't have enough points, you can think of bank statement. When you sell, you sure have sale proceeds here. So the bank statement showing that the sale proceeds have been received. Or cash book. Bank statement or cash book here. Bank statement and cash book showing the receipt of the sale proceeds. Okay, and then next, I need one last point. Think of something else. Whenever I sell a set, back to basics, very simple. When you sell a set, when you buy a set, it should all be recorded in the non-current asset register. So I'd like to get a copy of the non-current asset register to ensure it's updated. Okay, non-current asset register. Okay, showing that the asset has been disposed. I am done. I'm done. Okay, let's look at part C now. Do you think part B is difficult? Yes, very, right? Part A is easy. Part B is very difficult. It looks easy. That's a scary part here. It looks easy, but it's quite difficult. And now we look at part C. Okay, what do I have in part C? In April 2006, Kefla was banned by the local government from emptying wastewater into a river because the water did not meet minimum standards of cleanliness. Kefla has made a provision of 0.9 million for the technological upgrading of its water purifying process and included 45,000 for the penalties imposed in other provisions. Okay, there are two figures, 0.9 million technological upgrading and 45,000 for the penalties imposed. I think every one of you will tell me IAS 37. Okay, very clear that this is IAS 37. Okay, so this is IAS 37. Yeah, that's the standard. And what can we mention here relating to the standard? Firstly, this 0.9 million technological upgrading, they created a provision for this amount here. Now, can this be provided for? The three conditions comes in again. Firstly, do you think it's probable that they will spend this amount? Yes, I think so. They got fined already, probable. Second condition, is there an obligation to upgrade? Is there an obligation? No, there's no obligation here. So, I think they cannot provide for the amount here. They fail the obligation test. Very likely, there is no legal obligation. Perhaps they can prove a constructive obligation to upgrade this thing here. So, I have to look at company policy. Amount can be estimated reliably. I'm not too worried about that because it's quite rare that the amount cannot be estimated. So that's one thing. Next, when they mention 45,000 included in other penalties here, I think if you get a penalty, do you make a provision for it? If you get a penalty from the government, what will you do? Appeal. Oh, okay. Right. Now, right. Pending the appeal, what will you do? Pending the appeal, you have to not provide for the amount here, but you have to record a liability, all right, accrual for this amount here. I don't know whether this is appealable or not, but I'll have to record a liability here already as an accrual, fine payable to the government here. Okay, either that or pay off the money straight away here. You cannot be putting in a provision of this amount, right? So that's one thing. My got the 2 points. For 5 marks, I think this is easy. Definitely. Questions will usually be like that. They have easy parts and difficult parts. Like this part is like more difficult, more easy here. Part B is difficult, so they try to balance it out here. Part A is okay. On average, you score half the marks from here, you are fine already. Okay? Now, I'll come back to this one. Some points. Part C. On this water and the first matter to consider, I have to mention materiality, of course. You calculate materiality. In this case, it's likely to affect, look at the figure, 0.9 million, the provision. I think both should be calculated against TA and PBT, both. Affects TA because a provision is a liability. Affects PBT because provision is an expense as well over here. Okay? So, materiality. Then you state that it's material or not material. Most of the time it's material. So you look at it here. Then next, you will mention about the standards involved. Okay. Technological upgrading. Provision for technological upgrade. I'll cycle the three conditions. Probable. Do you think so? I think so. Now, obligation. If you talk about legal, I think it's unlikely. Okay. If you talk about constructive, I think maybe. Okay. Now, then look at the penalty. Penalty involves, I believe a provision should not be made. Provision should not be made. Okay. What you should do will be, provision should not be made. Amount should be accrued for if unpaid. Amount should be accrued for if it is unpaid. Sorry? The is after close April 2006. Oh, okay. Then they have to disclose. It's a IAS 10 comes in already. That's why I say always pay attention to the date. But somehow this time I was too excited on IAS 37. I missed that point over here. Okay. Yep. In April 2006, so IAS 10 comes in here. Moral of the story, don't get too excited when you see the main point here. There are some sub points in this case, so let me confirm. We must have professional skepticism. Yes, March, April. So IAS 10 should come in. IAS 10, all right, comes in here. Now in that case, I got to change my answer a bit. Provision should not be made. Amount should be accrued for. If it is unpaid, then I'll add on a bit. As the event occurred after the reporting period, this is actually non-adjusting event. They have to disclose. Easy, just disclose. Okay. Now, what about the audit evidence? The audit evidence firstly, I talk about I'd like a copy of the company policy to determine constructive obligation. Okay. Company policy to determine if there is a constructive obligation to upgrade. But it will be quite weird if there's really a constructive obligation. Imagine in my company policy, I state that I'll always use the most advanced water technologies available here. Would be quite weird. Perhaps if I'm a hotel, it should be fine here. I actually saw that before in a hotel, but plastic manufacturing may be a bit weird to go on that line here. But fine, don't worry. Now, what other evidence? I got one. I think I need about two more. Correspondence with the government. Yeah, a copy of the penalty imposed by the government. Copy of the correspondence with the government indicating the penalty imposed. Okay, I need one more. Bank statement almost always help. In this case, I have not paid anything yet, so it doesn't help. Management representation is my second favorite point. In this case, I don't think I can take management representations here, so we got to think of something else. Sorry? Basis for the provision. You mean you want a management representation? How did they get the amount? Okay. For which one? The 0.9 million, right? Okay. You get a quotation, perhaps a quotation to show that the technological upgrading will cost 0.9 million. Yeah. So, okay. You get some quotation from supplier to substantiate that the provision, the technological upgrade will cost 0.9 million. I think it's enough. Okay, let's move on to another question. Do you have any questions? To summarize again, the technique is simple. When you get this kind of question, firstly, materiality calculation, then next you apply the accounting standard here. If you need to, you can also mention the impact on the audit report here. Not all the time, but in certain questions, when it is very clear that they have made a mistake. For example, part C of this question is very clear you cannot make a provision for the amount here. Then you can say, if you ask them to change, they don't want to change, qualify audit report. You can mention about the effect of the audit report. Yeah. But I believe I've shown you nowadays the questions are easier. It's like they provide you just one point, but it's like you need to discuss a lot on the points here. Nowadays, it looks like they focus more on explanation rather than the content. This was like more on discussion. They look at various different possibilities here. Okay, let's look at another question very quickly. Look at the next one here. You see? The examiner says this. Mere lists of questions are positively discouraged. Do not answer a question with a question. Is amortization on a straight line basis reasonable or permitted by IAS 38? Don't ask questions like that. Answer them. Okay, and the rest as well. Was the equipment impaired? Should it be revalued? Don't ask questions. Again, answer them here. Okay, we look at the Lemon Company. Okay, let's see. Lemon Company, June 2007, and again it's the same thing, matters and evidence. You should expect to find here. Okay, now go ahead, take a few minutes, look through the case study, try this here. Okay, now let's see. We just need to pick out the issues from this here. You are the manager responsible for the audit of Lemon Company. Company's principal activity is wholesaling frozen fish. Draft consolidated financial statements for the year ended the 31st of March show revenue 67 million, PBT 11.9, TA 48. So 67 million, PBT 11.9, and TA 38 million. Now, The following issues arising during the final year have been noted on a schedule of points for your attention. Again, first one, pay attention to the date. 31st of March 2007, early 2007. So I guess it's still in the current year here, no problem. Chemical leakage from refrigeration units owned by Le Monde caused contamination of some of its property. Contamination of some of its property. In accounting language, is called impairment. Okay, so one of the standards that would come into account here could be IAS 36. Will my asset be impaired or not? Because you say contaminating my property. Okay. Of course, if you would like to argue and say it's logical, how can property be impaired by this? I'll have to look at the nature of the contamination itself here. Okay. This is one point. Now, I'm not producing a full answer, so take down any points as you must over here. Okay. So IAS 36 would be the first one. Contamination of some of its property. Then I go on. Le Monde has incurred 0.3 million in clean-up costs. What's the accounting treatment for this? 0.3 million, you have to write off straight away this amount. It has to be written off. Yes. Okay, expense to the profit for the year. Okay, now then 0.6 million in modernization of the units to prevent future leakage. Now 0.6 million in modernization of the units to prevent future leakage. Okay, there. This. What's the accounting treatment for this? Do you write it off as expenses? Yes, or do you capitalize it? The keyword is this. The keyword is modernization. Is there an increase in the capacity? Yes. What does IAS 16 say? Can I capitalize this? Yes. Okay. IAS 16 allows me to capitalize this amount here because the asset has been improved. So I can capitalize the amount here. There's only one thing that I like to say. When I modernize the machine, I suppose old parts I will dispose it and I'll add the new part here. I suppose maybe the engine for this refrigerator, the old engine I might dispose it, new engine I'll purchase and add it to my fridge over here. So the new engine I'll capitalize, the old engine I'll have to trade as a disposal. Remember last week we tried the question on this drilling company, oil company, Shire Oil Company, and the machine, the drilling parts, they say when it's replaced, you have to trade it as a disposal as well. Yeah, all right. So it's the same accounting treatment. It goes under IAS 16. The modernization can be capitalized, but you just need to make sure. IAS 16. The old parts disposed, you have to de-recognize them, trade it as a disposal. Okay. Now, yes. Yes, provided it's a significant part here. But they mention modernization of the units, so I suppose it could be a significant component like the machine here. But what else can you change? And by the way, you look at it, 0.6 million, this is not a small figure. So I suppose it's a significant part. Now, apart from the fine, which has been expensed, this cost has been capitalized as improvement. The 30,000 fine, correct accounting treatment will be expense. Okay. To income statement. That's it. Okay. So to get the marks, there are 7 marks here. Let's count the marks mentally. First mark, materiality calculation. Alright. Calculate materiality. Tell me it's material or not material. You get 1 mark here. I have identified the first issue, which is on the cleanup cost. That should give me 1 mark. Another mark for the impairment. Another mark for this modernization of units here. Alright, that should be 4 marks already. Then let's look at audit evidence here. What kind of audit evidence would you need? I believe I need a copy of this notice from the regulatory authority to confirm the amount of the 30,000 fine. So I need a copy of the notice from the regulatory authority. That's one thing. Okay. What else do you need apart from that? They incurred modernization. How can you prove that they really modernize the unit? I want some invoice from the suppliers. Perhaps, what if it's actually done internally? Because I can outsource the modernization to someone else. If you outsource, then there will be an invoice. If it's done internally, what can you look at? Internal, right? Maybe I'm an engineer and I upgraded the unit myself. Yeah. So what kind of document would you be looking at? Perhaps some job sheets, alright? Some job sheets relating to the modernization. So the job costing records can show me this, that I've actually upgraded that, yeah. But whatever it is, I'm sure I will have related invoice because the parts I need to purchase from someone else. Maybe installation, I'll perform it myself, but the parts I have to buy from someone else. There should be some form of invoice here. Okay, 2 audit evidence. Let's get another one for the examiner. Bank statement. Yes, bank statement showing that the fine has been paid. You see the usefulness of bank statement now? Nearly every part you can write bank statement. Then you think of management representation also. Okay. Usually bank statement come together with cash book. You should say bank statement or cash book agreed to the bank statement showing that the amount has been paid. That's even better. Cash book agreed to the bank statement here. Because when you get the transaction, it should be from the cash book. But you want to vouch it back to the bank statement to confirm that they have really paid the amount here. Okay. Now that's 7 marks. Okay, let's look at part B. Part B is very interesting. I see a trend here with part B being difficult. Let's look at part B. While the refrigeration units were undergoing modernization, Le Monde outsourced all its cold storage requirements to hot warehousing services at 31st of March 2007. Is that the year end? I think so. The 1st of March 2007. It was not possible to physically inspect Le Monde's inventory held by Hawk due to health and safety requirements preventing unauthorized access. Health and safety requirements preventing unauthorized access to cold storage areas. Le Monde's management has provided written representation. They provided written representation. The inventory held at 31st of March was 10.1 million. I think it should be material. The amount had been agreed to a costing of Hawk's monthly return of quantities held at 31st of March 2007. I need about 4 points here. Can you tell me something? About 4 points I need here. Clearly, this is an inability to obtain sufficient appropriate audit evidence, or you can call it a limitation in scope here. Alright? I am not able to get audit evidence. This is a limitation of scope. The issue that they actually inform me, health and safety requirements preventing unauthorized access. Do you buy that excuse? As an auditor, they don't allow you to go and check the fish, the area where they store the fish, because they are afraid that they contaminate that. Yeah, you buy that excuse. They are outsourcing to a third party here. Okay, now I think if I store money in the bank, the auditor says, can I receive the bank vault here? I don't think it's possible. So I suppose this is quite a good excuse here. You see, looking at it here, I suppose it's quite a good excuse. But I smell something fishy. Ironic since they have fish here. Now, why? Because if you look at it, how come I am called unauthorized retailer, but the management themselves know? They provided me with a written representation saying that it's 10.1 million. Now, I think ISA 580 says that in order to accept your representation, I must be sure that you know. Then only I can accept your representation. Yeah. If I am not allowed access, I don't think you are allowed access as well. Yeah. So there is a risk that the person providing us with the representation does not know, all right, the amount. Yeah. That's another matter to consider. What else should I put in? Find out, has the inventory been moved back in-house or not? At that time, it was outsourced because I suppose now I have finished modernizing the units. Maybe I have moved them back in-house here. If it has been moved in-house, very simple. Perform a stock count right now, perform a rollback procedure. 2 days, ending balance, that should be sufficient. Since it appears that they have pretty good records as well. They have this monthly return of quantities and so on. I should be able to perform rollback procedure. You perform inventory count right now, roll back to that date, should be enough. Okay, 7 marks for that. Okay, right. What are the audit evidence that I'll require? Since you told me unauthorized access, I want a copy of this regulation preventing unauthorized access to storage areas. That should be one. What else? I'd like a copy of this management representation provided here. Okay. What else? I suppose I'd like to look at this results of rollback procedures here. Rollback procedure to prove this amount. Okay. Now, that's part B. Let's look at part C. Part C is a 6-mark question. Lemon owns a residential property apartment above its head office. Somehow I'm thinking of IAS 40, investment property. Okay, but let's see. Until 31st of December, it was let for 3,000 a month. I think this is investment property. IAS 40, residential apartment. IAS 40. It was let for 3,000 a month. 3,000 should be the fair value of the income. Since 1st of January 2007, it has been occupied rent-free by the senior sales executive. Senior sales executive. I think you see something. IAS 24. Related party transaction. This is a related party. Okay. 24 here. And then, should it be reclassified to IAS 16? I think so. Now we are using it in the course of conducting business already. Alright. So, maybe the property should be reclassified as IAS 16. Yeah. Is there a difference or not? IAS 16 and 40. Yeah. Changes in the property value. One is charged to this current year profit and loss. Alright. The other one changes, you will trade it as impairment perhaps here. So, yes. There is a and the fact here. Okay. I'll mention IAS 40. I'll mention IAS 24. You need to disclose this as well. What else? I think that's it. Okay. Audit evidence. Firstly, how to prove this 3,000 income a month? Prior year working papers can help. Since I think I might have some prior year working papers, but since this is something that's quite recent, I might be able to get prior year invoice, alright, pertaining to the rental amount. That should help me. Invoice pertaining to the rental from the prior year records. Then, perhaps another thing. I'd like to look at the service contract of this senior sales executive. Is this part of the remuneration package or not? Alright. Service contract of that. Then, they say Lemon owns a residential property. I suppose I'll be able to look at the title. the title should show me that you actually own that property here. That should be it. Right? Enough evidence here. Just make sure when you get the evidence, think of how you can use it here. Okay? Okay, what did the examiner mention? There's a lot of points here. The examiner mentioned quite a couple of things. You can look at it yourself here. To summarize with you, let me come back to this one. I have done Prescott, Kepler, and Lemon. 3 questions. Okay. Now, tomorrow we are on a tight schedule. Okay, we have quite a bit of questions to look at, so we will have to pick certain questions here. I'll be looking at few of these questions. Banana, I'll be looking at that with you. Apricot, Juliet, and Butler, all 3 questions are on PFI. Nowadays, PFI questions are quite popular, so we will pick one of them over here. Okay, the PFI question. I'm thinking to pick Butler Company since it's last sitting question here. So some students, particularly those that sat for the examination last sitting, should be quite interested in that question. So we'll pick Butler Company. The South group, I'm definitely trying that. It's a group audit question here. And rumors have it that it's very difficult. So we'll look at it here. I don't think it's difficult though, but we'll discuss it and see. Okay, and then tomorrow as well, we'll look at the mock test and also on this comparative. Yes. Okay. I'll see you tomorrow.